All right, guys and gals, let's get back at it here this evening. It's about that time of day again, as always. It's Thursday evening. It's June the 20th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best levels, the best setups, the best opportunities we see setting up for tomorrow. That's Quad Witching Friday's trading session. And tonight, we're going to grab the oil, the S&P, the Nasdaq, the gold, the euro, and we have a lot to talk about in tonight's video, don't we? But I'm going to start off tonight with the black gold, the Texas tea, the crude oil futures, because as you probably saw in the headlines today, tensions in the Middle East are brewing, and that means oil is popping higher. But some very interesting clues in the chart tonight. They're going to help us get ready for tomorrow's quad witching session. Let's jump into that oil chart here tonight. That black gold here rallying higher here. You know, and again, unless you've been living under a rock the past couple days, we've had a lot of tensions building, rumors flying about causes of tanker attacks and pipeline sabotage and all the stuff. I'll let you guys read that in the newspapers. But what we know right now is we know this market is bullish, and bullish. We've seen two big bull runs in the last few sessions. And of course, you'll notice the session turning sideways here, right, and going into a range. This is a pretty simple scenario. We have a bull market into a trading range. And of course, that trading range tells me I want to buy low, I want to sell high, and I want to avoid that middle. Now, obviously, with all this bullishness and all of the attention being given to the Middle East right now, it's definitely difficult to justify being a seller on this market. I'll tell you that much. So I'm definitely looking for some buying opportunities on oil tomorrow. And at the same time, I'd be lying to you if I said I wasn't looking for possibly another leg higher. So, you know, if we keep hearing about these news headlines overnight, we may be looking at another leg higher here. And we'll talk about how to buy the pullback if we get it, how to trade the breakout if we get it, and then maybe, just maybe, we get that collapse back down into that range, and we'll talk about what a failure looks like and a reversal looks like here tonight on this video. If you're an oil trader, tomorrow has potential to be a very, very big day in both directions, so you definitely want to stay tuned for more on that. How about the S&P right now? Boy, just look at this chart. I have a hard time keeping a straight face just looking at this chart right now. Of course, we got the reaction we talked about last night, right? We talked about this last night on the newsletter. We called it reaction, right? Thursday today. And I would say we heard the reaction loud and clear. People pretty much are kind of guaranteeing right now that rate cut in the month of July. And then, of course, we hear about the potential war going on with Iran. Obviously, right? I'll let you guys worry about the headlines. All we know is that was the rumor towards the end of the morning. The market pulls back. And then all of a sudden, oh no, we're not going to go to war. And oh, everything's fine again. The market goes right back up again. This really underscores just how fragile these markets are right now. It takes one tweet to send it up, another tweet to send it back down, and then, oops, everything's fine again, and we rise back higher. All kidding aside here, though, all kidding aside, what do we know right now? We know we have a very strong run higher. Anytime we have a strong move in one direction, we're looking to buy some pullbacks. I've got some key levels of support that I'm looking for here, and a couple really nice setups I'm watching for here tonight on this S&P. What about as the market goes higher? Ooh, that's going to be difficult. As we go higher, I got resistance, resistance, resistance. It's going to be difficult to buy this move higher, so I'm looking for two specific scenarios, one being a breakout, and the other being, well, I'm going to make you wait for that for tonight's video. So make sure if you're an S&P trader, you're going to want to stick around for this. We'll talk about buying the pullbacks. We'll talk about trading the breakouts. And as always, I'll give you guys a good plan in case this thing dumps right back down in, because we get some big news tomorrow morning, which we'll talk about here in a moment. Over on the Nasdaq here tonight, Nasdaq had potential to be a nice short covering rally. Again, same kind of thing on the Nasdaq as the S&P. We had the rate cut. No, war. No, everything's okay now, right? But you can definitely tell this NASDAQ didn't recover like the S&P did. And although we do have a 1, 2, 3 reversal off of this low, which is giving us a very clear plan of attack for tomorrow, I have to tell you though, this thing looks like it wants to go sideways right now. It really does. And that trading range, that potential trading range, is really going to take center stage for us. The S&P and the Nasdaq are very, very different in that scenario right now, and that kind of personality of this market. So I'm going to talk about how to avoid getting trapped on the wrong side of this market right now, because this Nasdaq feels like it's going to fool a lot of people here in the next few hours. I want to make sure you're ready on that. We'll talk about how to trade it to make sure you're absorbing the range, and of course what to look for to know if it's not going to be a range tomorrow morning. Because as you can imagine, I don't want to get aggressive on buying this market right now to go back up to where the S&P is, right, if it's going to be a trading range. So we'll talk more about that here on the Nasdaq tonight. And then over on the gold tonight, boy, gold, this thing got hit with the ugly stick a couple times today, right? It fell out of the ugly tree, as they say, and hit every single branch on the way down. It went up, and then, man, what an interesting chart. They couldn't get that big round number. Obviously, they tried a couple times there. I think there's a lot that we could look at on this. The most important clue right now is that trading range. Strong bull market up into a range. What does the range tell me? It tells me I want to sell high. It tells me I want to buy low. I want to avoid that middle. I definitely want to be a buyer on this with the potential war, right, with violence in the Middle East right now. There's definitely a lot to look forward to be a buyer on this gold right now. And of course, trying to be a seller on this, I've got one very specific pattern I'm looking for to sell off of this high as well. And obviously, we're going to keep an eye out for a breakout, because there is a measured move up there that's definitely available if we can get enough strength here. We're going to dive into all of those patterns tonight on the video. I'm looking to buy it, but I'm not opposed to being a seller as well. We'll talk about buys, we'll talk about sells, and we'll talk about breakouts as well. We'll also talk about how to avoid some of the common traps on gold tomorrow. Also, how about some euro? Boy, that euro looks pretty tuckered out here right now. Had a really busy early part of the session today. Did a great job in our trade room sidestepping that, right, that pullback. Lots of clues on this chart we can talk about right now, but real quick though, strong move up, settles into a pullback, right, into a range. That range is one very important clue, but I'll tell you right now, it's not the most important clue on this chart. There's one more important clue on this chart. We know we have a bull market. We know we have a trading range. Okay, much like gold, right? I want to buy low, I want to sell high, but there's one really big clue, and no, it's not the trend line. It's not that trend line. I'm going to make you come back and stick around here tonight to learn what that big clue is, because I definitely want to buy low. I definitely want to sell high, but there's one, right? There's one very important clue here right now that tells me how to buy low and how to sell high. I'm going to go into a lot more detail on that tonight on this mighty euro. Got a lot to cover here tonight, don't we? Euro's got a missing piece. Gold is telling us to be careful. Nasdaq's trying to pick your pocket tomorrow. I can feel that coming a mile away. S&P, beautiful short covering rally, but we don't want to buy high. And that oil, what's going to happen tomorrow morning? I'm going to put all the plan together. That way you're ready for it no matter what happens tomorrow. But before we jump into those charts and put this plan together, I want to make sure you never miss another great newsletter. And be aware that just before I publish my video every evening on this blog and on our YouTube channel, I send out an email to everybody on our email list. I want to make sure you get that email so you know when this nightly newsletter is posted, so you can be the first one to get access to all that great information. To join the mailing list, all I need from you is your name, your email address, and then hit that subscribe now button. And then don't forget, when you click that subscribe now button, your job is not over. You still need to go check your email, because I'm going to send you a welcome email. And inside that welcome email, there'll be a verification link. There'll also be some goodies in there so you and I can get the most out of working together with each other every evening. So don't delay. Pause the video if you need to. Join the mailing list. That way you'll always be the first to know when this nightly newsletter goes live. And then one more thing, I need your help tonight. I need your help. You know me, I'm always trying to improve this newsletter. And I have a question for you. In your opinion, where you are right now in your trading journey, what's the biggest obstacle standing between you and becoming confident and consistently profitable? What is it, right? Is it account size? Is it not knowing trade management? Maybe it's mental discipline. Or maybe you simply can't figure out which indicators to use. In your eyes, not my eyes, but in your opinion, what's the biggest obstacle standing in front of you? I'd love to know what obstacles are in your way so I can do more to help you get through those obstacles. It would mean the world to me if you spend a couple moments, give me some feedback in the comment section below. The question is, what's standing in your way? Is it time? Is it money? Is it resources? Is it experience? In your opinion, right? What can I do, or what's standing in your way that I can help to do more of on this nightly newsletter? Drop the comments in the comment section below. And while you're down there, if you watch this video every evening and you love this nightly newsletter, give me a thumbs up if you would, please. That thumbs up on the YouTube video helps to expose this lesson in these videos to all kinds of the traders on the planet who are dying to know all the good stuff that we share every evening on this newsletter. So after you post me some feedback, hit that thumbs up button. That would mean the world to me, and I appreciate your valuable time. And don't forget, if you have any questions, right? Maybe you want questions about a free pass to our trade room, our free trading classes. Maybe you're ready to join as a client and come trade with me tomorrow in the trade room. Or maybe you just want to know what's the best charts, who's the best broker, where do I get the lowest commissions? Feel free to call that toll-free phone number or use that live support in the upper right-hand corner. But for now, though, we got some work to do, don't we? Yeah, we do. We got some work to do tomorrow. Tomorrow is Quad Witching Friday. Now, what the heck is Quad Witching Friday? Well, you may not be aware of this, but every 3 months, the months of 03, March, 06, June, 09, September, and 12, December, the third week or the third Friday of every 3 months. So the third Friday of March, third Friday of June, tomorrow, right? Third Friday of September, and third Friday of December. So tomorrow, right, we've got the third Friday of June, right? 1, 2, and 3, right? Tomorrow, the 21st of the month, is Quad Witching Friday. Now, why is this important? Well, it's important ultimately because of the self-fulfilling prophecy, right? That's why everything's important in trading. Nothing is inherently important until the group makes it important, right? So just like anything else in trading, the reason why Quad Witching is ultimately important is because everybody says it's important. And I know that sounds ridiculous, but that's just the way the world works, right? In all reality, what's happening tomorrow is you've got all 4 asset classes expiring. Basically it's OPEX on steroids, right? It's triple witching, right? People have always known OPEX, right? Third Friday of the month. Well, options expiring is also called triple witching. This is a very old school term, right, for options expiration Friday. Well, every 3 months, that options expiration Friday is quadruple witching, right? So the old term is this term is probably over 100 years old, right? The term triple witching, when 3 different asset classes expire, options we're talking about. Quadruple witching is when all 4 asset classes expire. You can search my blog for details on that if you want more details, but honestly, you really don't need to know much more than this. Because of quad witching, and you might be asking right now, wait a second, Joe, what does options have to do with us trading futures? What it has to do with us is that in a lot of big trading firms, right, they're not just trading options, they're also trading futures. And so when the focus moves from futures to balancing options, volume dries up, volatility increases. Remember, this is the third week of the month. As I reminded you earlier this week does tend to be a very volatile week of the month. Last week was the floundering week, right? We've talked about this a few times this month already. And so what happens is lower volume, higher volatility, because with options expiring, people are moving around their portfolio. And what's happened is, over the years, traders have picked up on it. They stay away. That kills the volume and leads to more unpredictable volatility. Now, I'll be very, very honest with you. And this is, if you watch this newsletter, you know this about me. My strategy is you'll never hear me say you shouldn't trade tomorrow. I just don't believe in that because every day is unique and we could have a great day tomorrow. So I'm not going to say tomorrow's, you'll hear a lot of old traders saying, well, I won't trade on Mondays or I don't trade on Fridays. Well, you're cutting yourself short by saying that and being so rigid. Traders never say never, right? Well, smart people never say never. So tomorrow morning, we're going to get to our desk bright and early. It's a Friday, and so anytime we have a Friday morning, we always know it's early in, early out, right? You really got to have a good reason tomorrow to be trading after 11:15, 11:30. Usually on a quad witching Friday, it's going to be a couple hours, usually between 9 and 11 o'clock is usually where you're going to get the big meat and potatoes tomorrow morning in the U.S. morning session. Now, obviously, lately, there's been a lot of action overnight coming out of Europe because we're dealing with tensions growing right in the Middle East right now. And so we could obviously have a lot of movement before the U.S. session tomorrow. But if you're trading with me tomorrow morning in the U.S. session, we open up our trade room 8 o'clock Eastern time. And my best advice is, and my plan for tomorrow is, get there early, do your job early, make your money and get out of there, because as it gets later in the morning, you're going to start running into that lower volume. Gamblers will start to stand out more like a sore thumb in the market, and you'll see a lot less reliable setups after 11:15, 11:30 tomorrow morning. Now, what else do we have to look at tomorrow? So early in, early out, home sales tomorrow. We have the existing home sales number, and I'll tell you right now, that will be most likely the big market moving event that's scheduled. Now, obviously, we're looking at, there's so much going on right now, right? There's trade, there's interest rates from the Fed, and of course, right, there's oil, right? There's the violence or the potential violence, war, I guess you would say. I don't want to use that word very often because I feel like people are just tossing it around everywhere right now, and it's highly unlikely. But at the end of the day, those are the three kind of themes that are woven into the markets right now that are not scheduled. Right? So for all I know, tomorrow morning, we might get a tweet, right, about interest rates or trade, right, or war, or who knows, right? There could be another drone attack, right? There could be a settlement of some sort. I don't know. So these are the things we're keeping our eyes open tomorrow. But assuming tomorrow is a chill day, right? Assuming that nobody hits Twitter over the head, right, with some making news, we probably are going to see the big move tomorrow around that 10 o'clock to 11 o'clock hour, if I could guess ahead of time. Now, again, that might change, though. If we hear something early tomorrow, that may do something we see today, get that big move in the early pre-market, and then deal with the range for the rest of the session. All I can do right now is prep myself for tomorrow. I'm expecting a smaller window of opportunity. I'm expecting this to be lower volume tomorrow. I'm honestly anticipating us to get some ranges tomorrow as we go into the end of this week, after such a big move by most of these markets in today's markets. And as always, we open up our trade room every morning, 8 o'clock Eastern time, and we're going to have a front row seat tomorrow morning to make the most out of our quadruple witching trading session. So now that you know the overall themes of this market right now, let's dive into our charts and let's talk about what's going on here so we can put together a good plan here for tomorrow's trading session. First things first here, opening up on crude oil. We'll go crude, then S&P, Nasdaq, gold, and euro. What do we know about oil right now? We know we're bullish. We also know we've got double tops, triple tops up here. That gives me a range. That's the main component right now on oil. We're bullish into a trading range. Now, when the market is bullish into a trading range, a couple of them on the chart right now, when the market is bullish into a trading range, there are two basic patterns that I always look for. The key, of course, is I want to buy low, I want to sell high, and I want to avoid the middle, right? Buy low, sell high, avoid the middle. Now, the key here is that momentum. Momentum is bullish. So what I'm looking for here is I want to see these sellers try to run this market lower. If I can get the bears now trying to run this thing lower, I can look for a failure pattern as those sellers try to sell a pullback. The bears now try to sell that pullback. We know where their stops are, and we can buy into those stops. Okay, that's a basic failure pattern. We'll talk more about that tonight as we dig into this lesson. But how do we sell off the high? Selling off the high is a lot more, it takes a little more patience. Because we have a bull market, I can't just apply that same failure idea and sell back down, because a lot of times the buyers be waiting right there and they'll buy right into my stop. Okay, that's a dangerous trap you don't want to fall into. Remember, because the market's bullish, the buyers are going to be trying to buy that breakout. So what I need to do is I need to understand that, and I need to anticipate those buyers will probably try once, try twice before they give up. Okay, we call this a nested failure pattern. It's a very similar pattern, but it's, as you can see, very different, right? Same thing, buyers will try once, buyers will try twice, and we're selling back down in. Now, what about a breakout, right? Is there potential for a breakout to that high? There is. There's actually two types of breakout patterns. One is what I call a two-try breakout, which starts off with a very strong break higher, followed by a 1, a 2, higher highs here, and a buy into those stops. Okay, that requires a really strong bull move, and we'll show you some examples of that here tonight on this video. The second type of breakout pattern is what I would always prefer, and that is what's called a 1, 2, 3 breakout, which is a 1, a 2, and a 3. This one, we don't need as much strength on the first attempt, but we need to see some strength on the second attempt. I'm going to mark up that high. That will create the hidden channel. I'm going to mark up that low, and then I'm going to look to buy that pullback to the low of that hidden channel. Make sense? Okay, that one requires some patience, but it's well worth it. It's a great setup. So now you know the basics of how to trade that range. And don't forget, you're watching this on a video right now, so feel free to hit the rewind button and watch that again and grab your screenshots. So now we've got this chart. Strong move up, right, into our trading range. Now the trading range tells me I want to buy low, I want to sell high, and of course I can look for, right, a possible breakout. Now where should I buy low exactly? Where's the best place to buy low? I want to buy low at a support level. What I do right now is get rid of this channel. Right, that channel will get, when I remove that channel, that will simplify things for us here. Right, so now we know here's the range. Right, got my range up top here. Range is pretty easy to see, right? I take the size of that range, and that helps me create the buy zone below and the sell zone above. You'll learn a lot more about that in our trading classes, which we'll talk about more in a moment. But just rest assured that once we know we have the size of that range, that's going to give me a tip off here now to where I can get a buy, right? The most likely area now where I should be buying. And you can already see buyers were dipping their toe in the water there as well. So I know where I want to buy now. I can also see too, I have what's called a reversal line back here. Reversal lines are anytime a strong move up pulls back and goes forward, usually it'll pull back and grab that level as support, right? Usually it does. If it doesn't, there's a big old bullseye now sitting right on top of that 42. So that, as you'll notice, lines up right along with that range level I mentioned. So that's what creates this little sliver, right? This is the magic area right there tomorrow, that 42 down to 33. So that gives me the area where I want to be a buyer. And now that you know kind of the basic idea of this, what I'm looking for is I'm looking for that move lower. Once I get the move lower, that'll bring the moving average down, right? That moving average now will come over. The sellers, of course, they'll try to sell off of it, right? The bears will try to take the bait. They'll try to sell off of it. It's not a bear market though, is it? It's a bull market, and you want to wait to be a seller until it's a bull market, until it's a bear market, of course. In this case though, I'm glad those bears are trying to sell this thing short, because now we know exactly where their stops are, right? And those stops now are going to make it easy for me to buy now right into those stop losses. Okay, again, this is that failure pattern I talked about earlier. We're not done yet though. Now the moving average comes right back up now, and now we can look for the pullback that comes thereafter. Does that make sense? It's a failure into a pullback pattern. Now just remember, one of the keys to a range is we don't want to trade the middle, right? So stay away from that middle, right? You don't want to get this pattern up inside that range. Right? You can see a similar pattern right here. We go down, they try to sell. That's not where you want to take it. You're buying right into that resistance. Not good. I want to get down, let those sellers try, buy into their stops, and then buy the pullback. Two easy setups. as we go higher. Now, speaking of going higher, right? What if the market goes higher here? What are some options for me as the market goes higher? And remember, if we sit inside the range, you sit on your hands. If we sit inside that range, you sit on those hands. We wait patiently. And this could be the case. You know, with everybody kind of walking on eggshells right now about this whole drone strike from supposedly from Iran, who knows, right? It's all rumors at this point. We know that people could be waiting patiently, and this thing really could go sideways. So we've got to, if it sits inside the range, you sit on those hands, right? Stay out of that middle. Now, what if we do get that run going higher? First of all, watch this area. Watch this area. You've got your trading range. That tells me now where that sell zone is, right? That tells me now where that sell zone is. So the first step is going to be knowing where that sell zone is overhead. I want to go up. Now we have to pay attention to get the short. Let those buyers try once. Let those buyers try twice and sell back down. Remember, once again, you don't want that pattern if it's down in the range. Okay, you want that pattern outside the range, right? Let them try once, let them try twice, proper signal, and we're selling back into that trading range. How about a breakout, right? How about a breakout? What's a breakout look like? First things first, strong move, right? You know where those sellers are looking for it up here, right? Strong move, right? Strong move. Got to push right on through. So here's a 2-try breakout. Strong move up, right? Clearly a very aggressive move. Now, I want to see bears try once. What's actually happening is that's profit taking from the buyers. Then higher high. So what happens is once those buyers take profit, sellers will sneak in here now and they'll put their sell orders just sitting right there. So once buyers are to buy again, they sell right into it. It's a very common trap, right? A very common trap. And what happens is you see it go up. The profit takers come in first. As it tries to go higher, the sellers come in and try smacking it down. But now I've got bears pegged. Now I know where their stops are right now. And now this market is bullish. And all I need right now is a nice strong signal and I can buy. Again, it's relatively aggressive on this, but as long as we get that strong move up, you can count on that next leg through. Make sense? Now, the easier breakout and the one that doesn't require as much strength is a 1, 2, 3. Again, we don't need as much strength going higher in the first leg, but we've got to see some jump, right? It's got to jump off that moving average on the second leg. It's called a 1, 2, 3 reversal. Now, how do you trade that? You mark up that high. You mark up that high, then down to that low, and this creates your sweet spot right here. Now we look for a pullback, a trap setup, a failure pattern. Oftentimes that pattern, that pullback, oftentimes results in a failure, right? We pull back. The bears think we're bearish. They try to sell it. We know where their stops are. We're buying into those stops. We're buying that pullback, right? So imagine now, right? Imagine now that's the pattern now on a faster time frame, right, as it pulls back. Does that make sense? Now, I've got a lot more, right, to share with you guys here tonight. We've talked about 1, 2, 3 breakouts, 2-try breakouts, nested failures, failure patterns, pullback patterns. I want to keep going on this, but I want to make sure that you get all the additional information that you need to make the most out of our time together. So here's what I'll do. I'm going to put a link in the upper right-hand corner here to a free trading class. You'll see the link pop up there in the right-hand corner. I'll also put a big red button right below the video tonight on this blog. If you want to get a much deeper dive, learn all the terminology, all the setups, all the different technical tools that we use with our 3-step strategy, make sure you check out that free trading course. Now, when we go higher here, where's my next target? Where's the next target? Well, we have to assume that $60 a barrel is definitely going to be lingering up there. But when you look at this, though, you got 1 leg, you got 2 legs, right? I would say probably 3 legs up. That's not going to be a very big measured move. Probably going to be this bigger one here, right? 1, 2, and then 3, right? So that will probably be now where we're looking for that next target here overhead, right? Up around that 55, 58, 86, maybe all the way up to that $59 a barrel there when you look at those measured legs. Again, this could be as simple as a tweet, right, overnight that could set this thing higher, and you guys now have a pretty good plan now for, right, that strong move up, 1, 2, right, and go from there. Great job on that. And again, grab that free course I mentioned earlier for a lot deeper dive into this. The one thing I haven't talked about, though, is how does it turn bearish? Right? How does any market like this turn bearish? We've got to get a reversal. What does a reversal look like? First, strong move down. Now at this point, that strong move down will give those sellers a reason to try to sell off that pullback. Remember though, it's not a bear market yet. If that fails, we're buying that sucker right back up again. So you got to wait for that failure. You got to wait for that pullback to actually hold. Once we get that hold, then we know we reversal. It's called a 1, 2, 3 reversal, right? Pretty clever, huh? It's just like the 1, 2, 3 breakout. And boy, is it reliable. Mark up that low, mark up that low, up to that high now. You got it. And now we'll sell that pullback now. And again, failure pattern into pullback pattern right off the high of that channel. Where's my target at that point? Target's back down into that 54.50 area, 54.40 area. That's the range, right, we came out of from last night's newsletter, as crazy as that sounds. So again, avoid that middle. If we sit in the middle, right, you sit on hands, and let's keep going. Over on the S&P right now. S&P, as I mentioned earlier, it was really a comedy session today, right, how the market went up, and then, oh my goodness, went down, then, okay, everything's good, and right back up again. Kind of laughable when you think about how fragile the market is right now. But the one thing we do know is we do know, I'm going to get this trend line on here, I almost forgot. Right, that trend line there, good. What do we do know? We do know it's a very strong move up. And anytime we have a strong move in one direction, we know the odds are pretty good. We're going to get a pullback and a second leg. Now, that second leg may only go back to retest the high. Let's be honest, right? That second leg may only go back to retest that high because you can see, right, all that resistance waiting overhead. If we're lucky, that second leg will go up to a big measured move. Right? A big measured move up there, right? Symmetrical leg there. But all we know right now is we know we have a strong move up and we should see a pullback and an opportunity here to buy low. One of the reasons why I want to buy low is because that will give me the ability to risk small to earn large. And the reason why risking small to earn large is so important is because whenever there's a big potential reward on a trade, it attracts more people. And just like we talked about with quad witching, why is quad witching important? The self-fulfilling prophecy. Why is buying deep in a pullback? Why is that important? The self-fulfilling prophecy. When people see a big potential reward after a deep pullback like this, the same reason why nobody wants to buy this one, right? Nobody wants to buy that pullback. There's no reward in there. It's not a very shallow pullback, right? It's much better to wait for a deep pullback because then I can take a small amount of risk comparable to a potential much bigger amount of reward. That bigger potential reward in the minds of traders is a much more attractive trade. Okay, more attractive trade, more people will pile on. More people pile on, bingo, it's a much more reliable setup. So that's why we want to wait for that pullback right now, no matter what. On top of that, we can already see we're sitting right at the measured move, right at those major highs. This is a horrible place to be buying, right? I don't want to buy right here. Now, again, pending any, overnight news with the S&P right now, it's probably going to be revolving around rates, right, or some sort of war, right, rumoring that they've got going on in the news media right now. But, pending any unforeseen announcements here we don't know about right now, we should get a pullback. Give a chance to be a buyer here, or, right, we may go sideways inside of that range. So really at this point, and I realize this sounds very basic, right? The market could go lower, right? The market could go sideways, or it could go higher. And I know, save the jokes. Really, earth-shattering information. It's true, right? I know. It's not very complicated here. Markets could go up, they could go down, they could go sideways. So let's get ready for both of those or all three of those scenarios. Now, first of all, if we go sideways here, right? If we end up sideways inside the range, what's the plan? Well, first of all, it's a bull market into a range. So we just talked about this on oil, right? It's that failure pattern, right? That failure pattern below, right? It's that failure that nested above, right? Is this all making sense, right? Does this sound familiar? We just talked about this, right? Okay, so those are the two patterns regarding the range. But what about the breakout? Well, the problem is that the breakout, if we do go sideways here and we break out, here's the problem. We've got the high and that next measured move overhead, right? That measured move, by the way, is simply this leg into that leg. It's a very obvious measured move there. So I have to assume there's going to be a lot of buyers who are kind of iffy on taking that trade long, right? I will definitely be. Now, what's the best pattern, guys? I'm going to see how often you watch this newsletter here, right? For all you guys and gals who watch this every evening, you know this, but what's the best pattern to look for if we do see that breakout? Trap pattern, right? Traps. So imagine now we do see a breakout. Now what you want to do is you want to kind of, what's the word? Slightly adjust that two-try breakout pattern. Wait for the 1, wait for the 2, and then trap low. The key is going to be if we see a strong enough move higher, and again, the key here is it's going to be very strong because that strong move will tell buyers they can safely buy it. But because we have that resistance up here, the best setup that I know of to avoid buying into resistance or avoid buying too high is a trap setup. Now, trap setups are fantastic setups, but they're really mostly used when the market's running and has only the potential for a small pullback before it finishes its objective. Remember, in a trending market, the buyers in this case are trying to get somewhere. They're trying to finish off the retest of that high. They're trying to get back to that measured move. So when I try to go higher here, I've really got to be careful that I'm buying too high on that. And the best way to avoid that, right, is to buy a trap low. So that kind of answers my question, right, if price goes higher here. If price goes higher here, I've really got to focus my energy on traps, right? And one thing you want to keep in mind is that if we run up to the measured move, that is mission accomplished. Then you want to wait for the pullback. Wait for that pullback, look for that failure setup, right, and buy a failure. Most of the time, it'll run right to the measured move. It'll give you that nice little pullback. Moving average comes over. Sellers will try to sell it back down again, right? They'll try to short this sucker. And we, of course, be waiting there to buy into their failure. Okay? If we don't get the measured move, if we jump up 1, 2, then you still have that trap before you get there. Does that make sense? Right? If we can get in before we get there, great. But if it just runs up, then wait for the pullback, the failure, and go from there. And again, we're going to do this together tomorrow morning in our trade room no matter what. So I know tonight I'm going over the different scenarios to watch for tomorrow, right? But tomorrow morning we'll do this right there together while it's happening. Now, what about a pullback? Right, I'm going to pull back here. So I need to find some level of support that I can buy off of. And really right now, I've got this channel being drawn on, but this channel is really kind of a waste of time right now, like a lot of your normal channels are. They just really aren't that actionable. So I need to find some way. Remember, I have to find somewhere where I can buy at support so I can risk small to earn large. I want to buy at support because that'll protect me against the sellers. And I want to risk small to earn large because, again, that will trigger that self-fulfilling prophecy and make it a much more reliable trade. So what I'm doing is I'm finding levels of support. This is a reversal line, a prior level of resistance that I can then use as support. And you'll notice, right, that lines up right with, if I mark up that high down to that low, that creates a hidden channel, right? That creates a hidden channel. So this whole area right in here is really where I'm looking for this right now. Now, there are two different types of pullbacks I'm looking for right now. One is looking like it's going to be the case. It's a two-legged pullback. So imagine now we run lower. I'm going to draw that trend line over. Look to use that trend line now as a level of support. Now, I've mentioned this a couple times in the last few days. Remember, when it comes to a two-legged pullback, there needs to be some daylight between the candlesticks and that trend line, right? So in other words, you don't want the grinder. You don't want it to be grinding down like that. That's very difficult to time your entry on that because they all look good. So what you want to do is you want to let it go up, down and then go, right? There needs to be, again, like I say, there needs to be some sunlight, right? Some daylight that shines between, right, the candlesticks and that trend line. It's got to go up and over. That will give you that two-legged pullback, right? Or what I call a 2LP. And again, you'll see lots of examples of that in that free course that I mentioned earlier. Now, we may also see the market, right? It may not give us that, right? It may trade sideways and then shoot lower. Then that trend line won't be in play anymore. At that point, we go down, we look for the sellers, try to sell off that moving average. It's not a bear market though, and so we know we can buy into their failure, we can buy their pullback, as long as that pullback doesn't have us buying too high. Remember, I always want to make sure I remember, right? Where's my goal? The goal is, the target is back to that high, right? If I buy nice and low, I can risk small to earn large. Right? The higher I get though, right? The higher I get on this chart, the less reward available. Okay? As long as I can keep it a 1-to-1 or greater, I'll be okay. But the real powerful stuff is with that big 1-to-2, 1-to-3. Okay? Remember, you always want to have the potential for that. Doesn't mean you're going to get that every time. You always want there to be potential, right, for that run to really make up for, right, any losses. So now we've got this pretty much covered, right? We know what to do if it goes higher. We know what to do if it goes sideways. And we know what to do if it goes lower. How does it reverse? What's a reversal look like on this? A reversal is a 1, 2, 3 reversal, right? Like this one, 1, 2, 3 reversal, right? What do? You mark up those lows up to those highs. Mark up that high, right? And you sell off the high. This is the exact same thing we talk about every evening on this newsletter, right? So if we see a strong move down, get that out of there, right? Strong move down, moving average comes over. Okay, now the key here is you want to see him sell off that moving average on strength, right? Nice strong move off the moving average. Then mark up that low, mark up that high, up at that high, and then there's my sweet spot. And we're selling back down. The one thing about that sell is just make sure you're aware there's a trend line coming up here. Okay, so just make sure you're not selling too close to that trend line. That could really be a dangerous, right, trap to fall into tomorrow morning if it really gets bearish. All right, guys? At the same time, like I mentioned earlier, the Nasdaq looks like it's going to go range bound tomorrow. So don't be surprised if we end up really consolidating up here, right? Buying off that low, back to the high, and then back down. This may end up in one range tomorrow, again, because it is quad witching. And although quad witching doesn't affect us directly, it does indirectly through lack of participation and kind of a trader's holiday almost, right, on a lot of these markets here, because volume will be relatively low tomorrow. But again, with all that potential, news going on right now, I mean, we could easily have a very, very good day tomorrow for quad witching. How about the Nasdaq right now? So Nasdaq is really concerning to me. We had a very similar situation in the Nasdaq to the S&P, right? It is cutting rates, everything's great. Oh no, war with Iran, and then okay, everything's okay now. The one thing that we didn't see was you go back to the S&P here, right? The S&P got their short covering rally and ran. Okay, we didn't get that run on the Nasdaq. What this leads me to believe is those sellers who sold this thing short, they haven't gotten out of this position yet. The reason why the S&P ran so hard is because all the sellers, right, who got short back here, they got out of the way. And when those sellers bailed in their short positions, you know what happens, right? It shoots right back higher. So that is potential, right? There is potential for that short covering rally tomorrow morning, and we'll talk about that in a moment as well. So really at this point, it's a 1, 2, 3. I like that jump off the moving average. It's very difficult to call this a bear market right now. It's definitely not as bullish as the S&P, but at the same time, though, we have a pretty good scenario to look forward to because we have this rising support trend line back here. So even if these sellers do try to sell this thing back down again, I still think they're going to have a hard time breaking through that area, and buyers will be looking for that buy going back higher here. So who has control right now? The buyers do. I want to buy at support, right? I've got that 1, 2, 3, right? So I'm marking up that level. I'm marking up that high and down to that low. So this really is the sweet spot right there. But this is one of those scenarios where sometimes the hidden channel doesn't really make sense when you look at the bigger picture here. And the bigger picture is screaming loud and clear. If you take the size of this range, we are literally right in the middle. This thing feels like it wants to go sideways. Hit right there, hit right there, hit right here. We could end up here chopping around, right, as a range. And if that's the case, what I really got to do is I really want to see this market try to shrug off these buyers and make a run for it. That's the ideal scenario. The ideal scenario is to get that deep, deep pullback right now. And then knowing that sellers are still participating. And again, this is very, very important. The S&P ran higher because the sellers clearly bailed on this. The sellers are clearly still not in control, but they're still here. Okay, they haven't bailed on this yet. And that means that if we can get a run lower and then it fails, anyone who's still holding their short positions, they're going to see that and they're going to get the heck out. Right? So I think we do have the ability to convince these sellers to bail on this if we can get strong move down, let them get another try, and then buy into that failure. So normally, again, if this was a higher move here, a stronger move, I'd be saying buy the pullback below that channel. For this one, though, tomorrow, though, I really do want to see a stronger move down. Get those sellers really counting all their chips, right, on the way lower. Get those bears trying to sell into it, right? What I really want to see is I want to see this trend line hold. Then I know where their stops are. We're buying into stops. We're buying that pullback. And I'm hoping that once we start seeing sellers fail here, all those sellers who are still trying to hold on for dear life to make another leg lower, I'm hoping they're going to get stopped out and they're going to freak, right? And the market will jump right back up. Okay? Now, that also anticipates if it's a range. And this is why I like this strategy, because as long as I'm buying low down here, I'm not going to get into too much trouble. If I try to buy too aggressively here in the short term, again, this could just kind of roll over and keep going lower until it hits that trend line and then goes back up. So I don't want to get too greedy on this. I'd rather wait for a deep pullback, anticipating a range, let those bears try and buy as low as I can here tomorrow. Just to kind of balance or kind of offset the risk of trading in the middle of that trading range. Now, speaking of range, if we do end up going sideways, right? If we do end up running sideways here, right? What's the best strategy? At that point, it's a bull market. What do we do? Same basic thing, right? One try, let the bears sort of sell it, and we're buying into their failure. Okay, I don't quite, if we go sideways here, it all depends on kind of how long this range lasts. If we go up, it's a 1, it's a 2, and back down again. But that would be later in the morning. Okay, makes sense? So if we get a couple hours of this tomorrow where it's going sideways here, I'm going to really want to be a buyer more than I want to be a seller, right? I'll buy that failure below that low, right? But if it breaks out going higher, I'm not too keen on being a seller at that point, right? At that point, I'm thinking 1, 2, right? 2 try breakout and buying into those stops to finish off that short covering rally. Right? So trap as we go higher, right? If we sit here tomorrow for a while, right? So if it ends up sitting here for a while, right? 8 o'clock, 9 o'clock, 10 o'clock, and we're still going sideways, at that point now, we'll have no choice but to buy low, sell high, because it'll be a brand new market, brand new personality at that point. What if it jumps, right? What if it jumps? If it jumps higher here, same basic idea. I don't want to buy high. Right? I want to buy low. So I want to look for a trap. 1 try, 2 try. Get those sellers now to try once, try twice, find that little trap. And again, why a trap? Why a trap? Because I don't want to buy high, right? I need the strength to give me the confirmation. But then once I get up there, I'm right up around these highs. I don't want to buy up there. I want to buy low. Wait for a trap, right? Wait for a trap. Okay, so really sensitive area up there, up at those highs. Look for that trap pattern if we do make that run. And then again, how do we reverse? Reversal, 1, 2, 3. Got to be a strong move down, hold the pullback, and jump. Mark up that low, mark up that low, mark up that high, and we're selling off of that high. Where's our target at that point? Back into the range where the party started from. right? Back into that range, down around that, just below that 7,700, right? 76.80, 76.60. And again, once we have more information tomorrow, we'll be able to make a more educated decision as far as where those targets will be. So be aware of the Nasdaq tomorrow, potential range. I think that Nasdaq could get a little bit ugly there if we're not paying attention. How about some gold right now? There's a lot to look at on this chart. Let's take a quick look here. First of all, strong move up right in the pre-market. That strong move tells us we know they're looking for a retest of the high. They got the retest of the high. If they keep going higher, where's their objective? A measured move. Anytime we see a strong move in one direction, we expect to see what? A retest minimum of the high. From there, it's a measured move from there. Make sense? Okay? We got that retest of the high, right? They got that retest of the high. Don't worry about the fact that it didn't actually retest the high. It's close enough, right? It is, right? It's close enough. So we know right now buyers have control. They've retested the high. Now, what else do we know here? We also know, if I get rid of some of these extra tools here, we'll get these off here once to talk about them. We also know the market went up, back, and then just got crushed, right? Just kind of sat here for most of the day, almost like a fear-based or confusion-based range out there. So we know the market is a range. Now, what do we know about ranges, right? We know there's a bias to the range. There's a bull bias to that range. What does a bull bias tell me to do? It tells me use the size of that range to buy low or sell high. So we can easily see, and this is what makes me think the range is probably going to be the most important thing for tomorrow. Look what's happening. It ran right now. Okay, it is the high of day two, but that high of day is also that range expansion. Okay, makes a lot of sense now that range is playing into this whole entire thing. It's amazing how these markets work, right? As if the range knew where that range expansion would, right? It's kind of mind-blowing when you think of it that way. But the bottom line, though, is we know that range tells me, right, I want to sell above it. I want to buy below it. Okay, what else can we do with a range? Well, the amount of the move above the range, right? You'll notice it marked up here. The amount of the move above the range is also the amount of the move below the range. That puts us down in this 74 area. So we got a lot to cover here, right? We got a lot going on. Got a trading range, got my range expansion levels, and I've got that pendulum swing all piling on right around that 1375 area. That's a great spot right now to look for that buy. Okay, so now we kind of know where we want to be a buyer. We're bullish, right? I definitely don't want to buy high up here. Okay, I know we're bullish and I want to buy in a bull market, but I don't want to buy here. Okay, I want to buy high. I don't feel like paying the highest price in the lot, right? You might want to, but not for me. I want to buy the lowest price, right? I want the lowest possible price I can get, and seeing that is down around that battle zone. Okay, what else do we know? What if it goes higher here, right? What if it jumps? I'm connecting these trend lines here, putting it up to that high, and that midline seems to fit pretty well. Okay, what is that? That's a spike in channel. Now, spike in channels are pretty interesting patterns. First of all, and again, I would say this is kind of like a half-baked, spike in channel pattern right now. What I'm doing is I'm giving us a potential target for us, right, before we get to that measured move. Make sense? Okay? So if we do end up running higher here, just be aware there's probably going to be a great place to take some profit, right, up around that high. Now, remind me again, though, what does a spike in channel usually tell us? Spike in channels, right, is a spike up into a channel, right? Spike in channel. Again, this is not your perfect spike in channel, but most of the time, though, a spike in channel will tell us to look at that deepest part of the pullback, right, the base of that channel, and that first low. That is usually the buy zone right there. Price pulls back, and people are waiting for it. The reason why a spike in channel almost always gives you a deep pullback, and again, I'm going to say it again, we do have the opportunity tomorrow for more headlines. We don't know it yet, but that could change all this stuff, obviously. But pending any more of these dramatic, sensationalized headlines, right, that we saw today, we know that there's probably going to get a pullback. The pullback we now know is probably going to go down to the base of that channel, right? So back to our chart now. Where's the base of the channel? Right? The base of that channel, put that right there. Where is it? It's right there, right? It's right there. That's a sweet spot now. Well, that looks familiar, doesn't it? It is. It's the same area, right? So spiking channel says buy down here. Pendulum swing says buy down here. Range says buy down here. I'm starting to think that's a pretty important area for us to pay attention to. Okay, so now we know the basics of this. I'm going to get rid of the channel. Okay, because again, I think that channel is important, but it really kind of clutters up the chart right now. I want to make it easier for you to see, right, what's on this chart right now. So avoid the middle, buy low, right, and sell high. First of all, what if we get the pullback, right? What if it drops? If it drops right now, that's going to be one hell of a move lower. And anytime we have that much momentum, I want to be a buyer down here, but if I see a real sharp move down, right? Like back here. Look over here. Strong move down. What happens? The bears try once. The bears try twice. Then it goes back up. That's the same idea you want, right? So strong move down. Then again, because that momentum will be so strong, right? It's much different than the market being inside the range and going down, failing, and going, right? So if we go back into the range and settle in here for a little while, right? If we go back into this range and settle in here for a bit, well, fine. Then I'll look for that failure pattern, right? Let them go lower. Moving average comes over. Seller failure, and we're buying back in, right? So if we end up sitting inside that range, that takes the momentum away. It kind of absorbs that momentum. And then what it'll look like from there is look for that, literally that failure from there. But if we just collapse back down here, yes, I do want to buy, but now I've got to respect that momentum, and I want to let the bears try once, let them try twice, and then I can buy right into those stops, right? Let those aggressive sellers try once. The conservative sellers are going to come in right above them, right? Let them try twice. And then oftentimes there's a trend line that gets drawn on, and that trend line is really where you're looking for that buy coming off of that low. Again, if we end up back into the range, though, and go sideways, all you need now is that move lower. Moving average comes over. Bears try to sell into it, right? It's a failure into a pullback, right? And running back higher here. Okay, same basic pattern we've talked about. And again, I'm just drawing this up right now. I have hundreds of real chart examples, right, of those setups as part of my free course. So grab that free course link. It's a big red button below the video tonight. And of course, that big link in the top right-hand corner as well. All right, looking good on that. Now, what if we go higher here, right? What if we go higher here? First of all, if we sit, right, if we sit up here and go higher, don't be afraid tomorrow morning if this thing starts to create a new range up here. Okay, one thing about these markets right now is because they're based on headlines right now, this could jump up and it could go sideways here. So the range that I have right now might not last forever, right? We might see a new range forming. If that's the case, you know the plan, right? 1, 2, and buying back up. So if we see a couple hours overnight here where the market starts going sideways here, now it's holding that high, I'll move my range up and look to buy low from there. Okay, what if it runs, right? What if it runs? What are some different things to watch for? One would be a jump up into a range around the measure, around that round number. Again, range bound market, 1, 2, and up from there. Failure patterns. Okay, or does it run 1, 2, right? 2 try breakout. Where are they trying to go? If they get that 2 try breakout, again, it's that, right? It's that channel. Right? So let's say we do get that run up, right? Bears try once, bears try twice. The closer we get to the top of that channel, the more important it will be to get a trap low on that. Okay, does that make sense? Okay, the closer we get to the high here, the closer we get to the target, the more imperative it is, the more important it is we get a trap, because I don't want to buy into that resistance. Okay, so keep an eye out for that. Again, let the bears try once, let them try twice. Or the much easier one is the 1, 2, 3. Perfect, right? That's a breakout. Now we know mark up that high, mark up that high, mark up that low. There's our sweet spot now. We're buying that pullback on the way up to that measured move. Makes sense? Up the top of that channel, right? Up to that measured move. That's our next target. And again, right, we know about reversals. In this situation, though, we dump back in. The bears try once, bears try twice and go. Or do they hold? do they hold? If we hold that move lower, now same thing, right? Mark up that low, low, high, and we're selling off that high. Where's their target? Target's pretty easy. They're going all the way back down where this thing came from, right? Down into this range here, right? So this will be where the target is for those bears, right? Sorry about that. There's a target for those bears, right? If this thing does collapse back down, where's that target? Back down to that 1350 area, right where that vertex of that triangle will be. All right, good stuff there on gold. Tomorrow has potential to be an ugly one there on the yellow metal. Don't be afraid to adjust this range. And of course, as always, right, come see me tomorrow morning, 8 o'clock Eastern time, and we'll do it together. Over here on the euro, right? Now, I promised you a special secret with this euro. It's very, very important. Remember, anytime we see a strong move in one direction, we expect to see what? A second leg. What's the euro doing right now? Big, strong move up, right? Anytime we see a strong move in one direction, we expect to see a second leg. They're going to try to get that second leg. But what's the word of the day? The word of the day for the euro is recency. Recency. Is that how you spell recency? Probably not. Recency. As you can see, I'm not an English teacher, right? I teach trading, not English. But the bottom line is, right, recent. Is that a T in there right now? I'm sure somebody will correct me on that in the comment section below. But the bottom line is, look at the recent strong move down. That recent strong move down tells me we're going to probably get another leg going lower. Okay, that's the most important thing in this chart right now, right? We do have a nice big bull run. It's a spike in channel, right? And what do we know about spike in channels? The base of that channel, right? The first pullback, that area right there lines up pretty close to right where I'm thinking this battle zone will be. What else do we know? We get this range right here, right? That range, yes, it is overall bullish, and I do want to be a buyer. But that shot lower, I just don't want to be too aggressive being a buyer here. What I'd like to do is try to get that second leg now lower and then be a buyer going back in, right? Let those bears take care of business. Let them get what they're looking for. Get into that spike and channel low. Look for that buy coming back up in. And you can already see, right, trend lines coming down. This is why I always say you want to see some daylight in between that trend line and those candlesticks. So really what it kind of boils down to right now is you've got kind of three different patterns because the pullback. Imagine that we pull back. Let's get this battle zone out of the way there. Right, we pull back. Come on, Joe. Get that out of the way, please. Right, we pull back. We run lower. Now that will obviously be the two-legged pullback. Moving average comes over. Failure pattern into pullback pattern and then right back up again. Right? These are three setups we're watching for. Remember, stay away from that range though. Right? It's a two-legged pullback. It's a failure. Right? It's a pullback pattern. Two-legged pullback, seller failure into breakout pullback. Stay away from that middle though. Okay? A lot of times what happens is that pullback won't happen until it's back in the middle. Right? So just because it's a pullback pattern does not mean it's a good location for it. Okay? So if that pullback pattern happens in the middle, stay away. Okay, that one might work, but historically, that's not going to be a very reliable setup overall. Does that make sense? So I'd like to see us break down here, get that failure, and then back up into that range. Now, this could also hold, right? It breaks down, moving average comes over, it holds and runs. Wonderful. Mark up the low, mark up the low, mark up that high, new channel, and we're selling back down. Where's my target? Target is back into that range, right, that we talked about from earlier on, right? Then we're in that 13,000 big round number. As we go higher here, this is very similar here to gold, right? Interesting how gold has 1,400 and the euro has 14,000. I think that's a coincidence, but it is quite interesting. The bottom line is, if we do run higher, we've got two things, well, really three things against us. One is the range, two is the high of day, and three is that round number. So obviously I can sell it, right? I can sell it. We go back up. I get a 1, I get a 2, and sell it back down. In this particular situation, knowing that round number is right overhead, I'm going to look for a little bit more security on this, get a trap high. We call this a crown reversal pattern for that sell going back down. Great example right here. We go up, buyers try once, buyers try twice, trap, and of course, selling it back down. that same pattern, right, over here. Up, 1, 2, trap, and back down. Makes sense? I'm not making this stuff up, guys. In fact, as part of that free course, as before, I've got hundreds of real examples of these setups, not just me, drawing around with my drawing tool here, right? But most of this stuff will come to fruition tomorrow, and I want to be ready for it, right? In my eyes, I want to be ready for everything that could be possible tomorrow. And a lot of people tell me, well, of course it's up, down, sideways, but that's what we prepare for, right? I want to be ready for whatever situation, right, we see tomorrow, especially if the market breaks out, right? Breakout. Now, this breakout's tough because if we get a break higher here, we may sit around that big round number, a lot like gold, right? And it might go sideways and may have to be 1, 2, and buy low from there. That may be a late morning move tomorrow. So I really think as the market goes higher, the only way to really be a buyer up there is to get the 1, 2, 3 and really see it run. I don't think a 2-try breakout is going to be very easy to find up there just because of location. Mark up that high, mark up that high, mark up that low, and now we know where that buy is from there. Okay, and where's my target up there? My target will be a measured move, right? That measured move coming off of that big leg, right? That next measured leg higher. Oh, look at that. Somebody put it up there. How nice of them. 1440, right? 1440, the magic number. That's how many minutes are in a day, right? 1440. So we know that we have, right? Know we're bullish, got a range, buy low. Beautiful opportunity here for a two-legged pullback into a failure. And man, oh man, I am excited for tomorrow's trading session. A lot of fireworks today. We may see even more fireworks tomorrow, right? Who knows? I'll have my eyes and ears open. I hope to see you with me tomorrow morning at 8 o'clock Eastern time, because remember, we all know there's money to be made tomorrow. The hard part is applying it to a real market in real time when sometimes it moves real fast or it throws us a curveball. The best way to do this is to do it right there with me. Come join me every morning in our trade room as part of our advanced class here at School of Trade. Our advanced course includes our trade room, our ongoing support, all the indicators, all the templates. It includes beginner classes, intermediate classes, advanced classes. It's a lifetime membership. It's really the best value if you're serious about your trading career. I'm ready to go for tomorrow. I want to see you there with me. Get registered by using that advanced course below our video tonight. And if you're not yet ready to be a member, don't forget, join the free trial. Our free trial is great. Got a free pass to our trade room, free access to our free course materials, right? Hundreds of chart lessons inside the free class. You'll love it, right? I'll also include some behind the scenes from our actual paid membership class as well. And don't forget, when you register for that free class, check your inbox, check your email. I'm going to send you an email with all the goodies, right? All the whole class links and everything. So don't forget, sometimes those emails, they get stuck in your spam folder. So if you don't see the email, check your spam, check your junk. That may be where it's hanging out if you don't see it. And don't forget, if you have any questions, any trouble at all, call that toll-free phone number. Use that live support tool, right? I'm always here standing by. I look forward to helping you out, answering all the questions and helping you this the right way. Right? When it comes to becoming confident and consistently profitable, right, we've helped thousands of traders do that here at School of Trade, and I would love to help you as well. So keep in touch. Don't be a stranger. But first, get some rest tonight. We get some great setups coming our way tomorrow morning. 8 o'clock Eastern time in our trade room. If I don't see you guys tomorrow morning, no newsletter on Friday evenings. The next edition of the newsletter will be next Monday afternoon. Same time, same place. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.